Hello and welcome to FinTech Diary. Every week, we speak to an industry expert who's part of the FinTech revolution. In the world of FinTechs, which is based on constant evolution and innovation, we question change makers on how they plan ahead and read the future developments. In every chapter of FinTech Diary, we get the breadth and depth of every segment related to FinTech. My name is Amol Deche, and my guest for this chapter is Rahul Kothari, Chief Business Officer of Razorpay. Rahul, glad to have you.
Hey, hi Amul. Really happy to be here. Thanks for inviting.
Sure. So, Rahul, to begin with, I think the fintech industry is well acquainted with the name called Razorpay. I think almost everyone in the fintech space, and specifically even in BFSI space, also knows Razorpay by now. Not just because of the high valuation, not just because of its unicorn, but the player is there since long time now in the industry. So since I'm talking to you, and we generally ask the fintech founders and the CEOs to share the dashboard with us. My first question to you is Rahul, is this that tell us how big is Razorpay today from where it started and where it is today?
Yeah. Amol, Razorpay started around 8 years back, and we started as a payments company, starting online payments. That was a journey we started by Harshil and Shashank, and while they were trying to integrate a payment gateway for one of the startups ideas that they had, they saw the challenges that typically a small new startup wants to go online that they face, and the idea it looked like a very great opportunity which they can solve for all the other startup founders. That's how this entire idea started, and it started with very few small merchants. Today, we process close to around now, we already, I think, on a yearly basis, process close to $90 billion of GTV. We have 3 business lines. We are into payments, we are into capital or lending, and we are into neo banking. We are into India, we are into Southeast Asia. So overall, I think we have grown significantly with the number of products across the entire fintech value chain, or rather the payments value chain. And the journey is exciting. I think over the journey also, what we realized while we started as payments, we saw that the startup founders and as the companies grow, the issues or the challenges that they're trying to solve are not only related to payments, but also related to the entire money movement flows. And basis that, we kind of started looking at all the other problems that we can solve for them, and a lot of new products and a lot of new services we launched.
Okay, noted your points. And I think it's very fair to create an external system as well, or resolve the external issues rather than solving one problem, because that's where you kind of serve the ecosystem. Rahul, just before we get into more details, give me some technical information. So you have the only one license as of now from RBI, which is payment aggregator or a payment gateway license, right? That is the only license.
Yeah, we also have the PPI license, the wallet license.
Okay, noted. So Rahul, then the question that I have is, because you are now quite a big player in the industry, if I vaguely remember, maybe in March, maybe in 2015, when you started with, I think, around $2.5 million of funding, to your recent funding, if I look at in maybe December, which was close to $400 million, right? I think some 370, 80 or something like that.
Yeah.
What has made Razorpay in all this, apart from the value building? What are the major changes that has happened in the Razorpay?
So if you think about it over last 3 to 4 years, so I think Razorpay as a company, I think has completely transformed. Around 4 years back, we were primarily focused into payments, and our mission at that point was to how to make the payment seamless for the companies. And while we were engaging with different startups and different businesses, we realized that payments is just one of the problems that the founders or the business owners think of. And they do not think of the problems of just payments in isolation. For them, whether the problem is of payments, whether the problem is of banking, whether the problem is of lending, working capital requirements, these problems are all associated. So I think the overall, the company's thought process started moving towards, if all these problems are kind of very closely knit into the founder's mind, and if we want the founders or the business owners to focus primarily on running their business and not to spend a lot of time into the entire money movement issues, then how we can solve for that. And from that, this entire new vision statement which we kind of rephrased around 3 to 4 years back, was how to make the money movement for businesses seamless. And from that, we started building 3 different businesses. So 4 years back, it was one business, payments business. Now, and over a period of time, we built 2 more business. Neo-banking business is also fairly scaled, where we have close to around 30,000 businesses working with us for different services ranging from bank accounts to payroll to treasury management to multiple services linked to banking. And then we also, our lending business scaled a lot, where we have close to around 5 to 6,000 corporate cards or business cards are issued to the businesses. So I think one of the major differences or transformation that happened was how to move from a single business company to a 3 different business company. And I think it's also fairly all these 3 business does not run into isolation. What we are trying to create is an entire fintech platform, which means each of these businesses are very fairly closely interlinked, whether from the experience perspective, whether from the value proposition perspective from the merchants. And therefore, I think that's the way even we think about transformation, the way we think about product also became very different in terms of how do we make the life easier for founders from end-to-end money movement perspective. So I think that's a fundamental change in thought process, and accordingly, the company structure, how do we run as a platform, as not as a single linear product company, some of those changes also happened.
No, sure, quite meaningful, Rahul. Let me, ask you a very important question, which is kind of a very critical to the fintechs. Every fintechs in the country now is: are you profitable? Are you making money?
No, we are not profitable. But probably, and I think I'm sure going to be a follow-on question. So I think I will kind of go a little bit more detail into it. We are not profitable as such. But overall, if we look at our payments business, we are spending a lot into the overall developing capabilities for the long-term basis. As I said, we are creating the entire platform, and therefore overall R&D spend is fairly heavy in terms of building the capabilities for the future and building all the different seamlessness of different products together. In addition, neo-banking and capital is something which are relatively new business. They are scaling pretty good, and it's also a lot of investment going behind that to kind of fuel the future growth. And that's where the majority of the investment is going. But if I kind of look in a way like, if we do not invest into any of the long-term future capabilities building, payments on a standalone basis could be profitable.
Noted. I think that's quite valuable. But give me more sense here in terms of your 3 major verticals that you're operating on, whether neobank or the payment gateway. Which segment is generating more revenue for you, or which segment has a lot of action that you are witnessing now?
Yeah. So given payments is our oldest business, this generates the highest revenue. It contributes to close to around 75% of our overall revenues. And then the remaining neo-banking and the capital business contributes to the remaining revenue. To answer the question in terms of which business is seeing a lot of action, I think Amol, very, very kind of difficult to answer that question. What I can give you a flavor of what kind of action we are seeing in all 3 different businesses, and I think the action is almost equal in different businesses. So in payments, we are the largest in the internet e-commerce space in India. We are operating at a scale which is like fairly big if you look at from any perspective. As I said, we kind of process close to now $8 to $10 billion of the transaction volume every month. And at this scale, the different kind of action that we see is how do we really look at the throughput volumes for supporting some of the biggest, say, the online sales events or the cricket events, and how to kind of really push boundaries on making our tech infra really solid. The other kind of action that we are seeing here is also, while how do we go more and more deeper into value chain of the payments? Now, it has a different aspect in terms of how we can foresee some of the new products that we can build around some of the latest changes happening in the ecosystem, for example, in UPI credit. What are some of the different elements of the payment ecosystem we bring together? For example, we recently kind of acquired a company called Poshwine, and through this, we are trying to see how entire payments and rewards can come and get integrated very, very closely. At the same time, we also acquired a company, Izeland, through which we are trying to see how we can backward integrate the entire payments value chain, so that we can provide seamless. We can have very strong control on the entire payment value chain, and therefore the experience can be really good. Because one of the major challenges in the ecosystem right now is that typically a payment leg has to hop through 7 and 8 different players, and therefore control is less, success rate is less. So I think a lot of action happening in payments in terms of how do we create better experience, how do we kind of focus on things like affordability, new kind of EMI options, new BNPL, etc. How do we scale it forward and kind of really make pushing the boundaries of how we can add more and more value to the end consumer experience and also for our businesses. Now, another kind of challenge that we solve there is around this entire no code revolution. The next phase of growth for online, or in fact, a lot of growth right now also is coming from online businesses, where the startup, the new businesses does not have a strong, I would say, the tech capability of getting integrated online, creating strong web portals, etc. So how do we kind of create some of those adjacent services, or how do we make the overall integration with the payments very easy so as to democratize payments across ecosystem? And I think this is what we have been doing for last 6-7 years. But how do we kind of continue doing it in a better way? Like, for example, if you think about, say, the EMI, or say the EMI options that you see on some of the large marketplaces like, say, Amazon or Flipkart, the way we think about how do we kind of take similar kind of now offerings, which even a very small business without having a strong tech capability in building these kind of portals, how do we kind of enable for them? So I think these are the kind of challenges we are solving, and it's a lot of action. The other action within the payments business is, how do we, so we have built a, as I said, very strong platform, scaled, and also tested for scale for different kind of volumes, different kind of use cases. Can we take this platform and leverage for some other geography as well? And therefore, we started operating into Southeast Asia. We acquired a company called Kerlek in Malaysia, and we're seeing how we can take this platform in Malaysia and start scaling there. So mostly the scale kind of action happening in the payments business. If I think on the neo banking and capital business, I think the action is very different kind. There today, the entire customer experience journey, the way we think about it, for banking is not optimized for, say, a customer delight. There's a lot of friction out there, and I think the primary reason for it is because traditionally, most of the financial institutions have thought of banking primarily from a process perspective, and thought, how can we build, as as technology became more and more advanced, how can technology help to adhere or align to those processes? Whereas I think when we think of new banking, we are saying, okay, how do we start leveraging technology for money movement, for holding money, for investing money, and how can we really make it a delightful experience for it? Now, the action there is more about how do we scale really fast, how do we figure out right kind of go-to-market strategies, what kind of marketing campaigns would work. Even there, a lot of things are about how do we learn very quickly and fail really fast, because in new businesses, a lot of new things will work and will not work. Now, on the capital and the lending business, like any lending business, which the way it has to be run is to scale slowly as you kind of start understanding the credit risk, right? So there, I think the action is in terms of how we can have very different kind of form factors for credit. And so typically most of the companies out there are solving for the problem of how do they underwrite better and give credit to consumers or businesses who really deserve. I think that the problem they are solving is the right selection and underwriting of the end businesses. We are also focusing on that, but in addition and top to that, how do we make it far more easier for businesses to get access to credit? So I will give an example. We have businesses who do payment volumes with us, and we underwrite those businesses to give them credit. Now, given they do payments business with us, we understand their overall credit history, we understand how their businesses typically function, what are seasonality around it, and basis that we have pre-underwritten rules in terms of how much of credit we can give to a customer for or a business for how much time. Which means a merchant, for example, a merchant has a requirement of say 2 days of extra money because a vendor came to him or a supplier came to him and said that, okay, if you can pay me advance, I will give you 10% discount. Now, for that business to get, let's say, access to say additional 10 lakh of money is not very easy at a very short notice. If the person has to go to the bank, apply for a loan, etc., it takes time. Given like, the overdraft limits is kind of finished, etc. Now, in our case, it's as easy as to go on the dashboard, click, there's a pre-approved limit. Within next, I think 1 or 2 minutes, the amount will be credited into the business's bank account. So, and given that we have underwriting which is based on transaction volume, given that it's real time, given that it does not involve a lot of manual intervention, the entire experience and the ability to get real time loan, different sachet of loans becomes far more seamless. So yeah, those are different kind of action happening in different businesses.
Okay, so quite meaningful and a detailed one, Rahul. I think no code revolution and adding more value. And I think I like the statement of, learn quickly and fail fast. I think that's the world where we are, right? In fact, sometimes I also believe to, from where I started as a journalist, started reporting only on repo rate and rate transmission. Now I'm talking about fintechs and all. Sometimes I believe that I should also learn some coding so that I will understand, the fintechs, much better. So quite interesting, Rahul. Tell me something more about the sachet products or the loan products. So when you are actually disbursing loans or maybe offering credit to these merchants or your customers, what is your source of credit? Are you having partnerships with the banks or are you lending through your own books? How do you actually match that?
So there are like mostly this is more in partnership with the banks. We are more of a kind of underwriting. We have strong underwriting capabilities, and we are the technology partners here.
Okay, noted your points. Tell me something more about no-code revolution. I think this is another point which I have been kind of learning from lots of fintechs. What kind of revolution this whole no-code revolution will create in the fintech space?
Yeah. So, Amol, if you think about it, right, the problem that most of the fintech companies are trying to solve, I would say most, not all, is to how to give access to this new age technologies, new age convenience, new age effectiveness to businesses which are beyond, say, the top, say, 1 million businesses in the country, or rather, say, the top 100,000 businesses in the company. Now, there's a strong difference between these large businesses and small businesses. These businesses typically would like to get any new product and go live and start businesses in a very short frame of time. For example, if a large business wants to go online, they can spend probably 3 months, have a couple of engineers who's integrating payment gateways or CRM solutions or payroll solutions, and they can live with it. But mostly if somebody is starting a new business or a very small business, the time in which they want to go live, the time in which they want to integrate and get things done like payroll or get access to credit is far shorter, because that's the way small businesses operate, right? And second is also the large businesses typically would have technical teams, or rather say professional teams or functional teams, who have expertise into different domains, and therefore they can get access to a lot of these the technology products through those strong technology functional teams. Small businesses does not have a luxury of it. If you see a very typical small business which wants to go online, it would be a team of 4 or 5 people. 1 or 2 would be looking at the supply chain, 1 or 2 on sales, probably founder himself is running payroll, and those kind of things would be happening. Now, if you want to give benefit of all, or the benefit of the technology at scale, you have to make adoption of all these technologies very easy to all these businesses. That's the fundamental problem I think we need to solve if we want to take all the businesses in India to next level through technology, innovation, or transformation. That adoption problem we have to kind of solve for. Now, as the name suggests, like the biggest barrier is these businesses does not having a technology know-how to integrate these products into their business or workflows or business ways of working. So if the technology adoption can happen without using any code, without requiring a software engineer, if any layman, like, who does not have any formal understanding of computer science or formal understanding of tech from its perspective, if they can do it, then we can make the adoption very, very easy. And it can also kind of let companies hyperscale. And that's a revolution. And I think it has come a long way over last, I think, 6 or 7 years as well. Razorpay, when it started, I think one of the biggest the reason for success was that we made the integration of payment gateway very simple. It was just one line of code which needed the integration. So if I say, like, at that time, typically most of the other companies which were into payment space would have required integration through kind of, going through the entire different sequence of code, understanding, requiring 2 or 3 software engineers, integrating over a period of time. What Razorpay did was to kind of make it very, very simple, very, very seamless, very single API, one line of code, you kind of integrate into your website, and you can get a payment gateway. Now, from there, today, we have come to a stage where we have these, different specific products, whether it's payment links, payment pages, which does not even require that one line of code understanding, and which becomes like almost no code kind of a revolution. And it's happening across different kind of products. But the idea is, how do we kind of make the adoption of these technology products to anybody and everybody, I think, and that's what it's all about.
Sure, Rahul. So now let me ask you a cream question, which is specifically about your business and the small business, which is actually the cream for you, and that's what is your major agenda. But Rahul, since when you started, I mean, when Razorpay started, and now I think it's been almost 7 years, and in the 7 years, the world has changed a lot. A lot of fintech players have also come into market, and they are also serving the small merchants or small businesses, because every, in fact, payment company now, or the fintech company, is targeting the small businesses. At the same time, even small businesses have also evolved over the times. Maybe it's e-commerce revolution that we are seeing, or maybe the other revolution that is going to happen. Considering all this hefty competition which is happening in the small businesses space, one, how big this opportunity is going to be for you, in the future, because the competition is very huge and they will grab some pie from your share as well. So how big this opportunity is for you, and how are you going to prepare yourself?
Yeah. Amol, I love to answer this question. I think, and because I think it is more about, as a company, what we are and where we are going and how we are different, how we're thinking different. I won't say how we are different, how we're thinking different than everybody else. So Amol, if you look at most of the other fintech companies out there are 2 kind of companies I will segregate. First are the companies which are focusing on end consumers, which are B2C companies, and there are companies which are B2B companies, whose customer typically businesses. So we are a B2B company. Over last kind of several years, there has been, like, always this kind of question whether we should get into B2C or not, because it was an attractive space, and kind of, you can do a lot of things around hyperscale and those things in B2C. But we consciously stayed away from B2C to make sure our focus continues to serving businesses which is our client, which are primary merchants. So I think that is one thing. Now, second, within B2B space in fintech, if you see, most of the companies, in fact, all the companies are picking one problem statement of fintech and trying to solve for it. Somebody would be solving for, say, credit using a corporate card. Somebody is solving a problem of, say, having a seamless checkout. Somebody is solving a problem of online payments. Somebody is solving a problem of offline payments. The way we think, and I think our understanding is based on multiple businesses we have talked to, the experience of kind of scaling the business over last so many years, is that these problems are not distinct in a business owner's mind. And also the solution to most of these problems are adjacent to each other. Like, for example, if as a business, I'm accepting a payment, it has to come into my bank account, and then I have to kind of do a salary payout. I have to do a taxation. And if I do not have enough cash flow at that time, I have to kind of raise raise funds or kind of get some loan. Now, all of these problems has a strong interlinkage between each other. And if we can reduce that friction and make it seamless, make all those reconciliation problems go away, make all those data inaccuracy problems go away, make all those time it takes to kind of understand one aspect of money movement and look at the other aspect goes away, then the problem can be much more meaningfully solved, and it provides far more value to a business. Say making seamless payment is a value one, and getting a credit is value two. But if you can do it seamlessly, the way I was talking about it, a click of a button, you can get the credit in your bank accounts in 2 minutes for say a 5-day loan. The value becomes 1 + 1 = 11. So I think that is now our entire the vision statement to make end-to-end money movement seamless for businesses, I think, is the fundamental differentiator in terms of how we are doing. We are building a platform. We are not building an individual product or an individual business. We are building a platform, and I think the value of that platform would be far higher to a business compared to all these different businesses or the different products which are working into isolation. We already see this, like the businesses which leverage more than 2 or 3 products on our platform continue to remain with us for far longer. They have far better net promoter scores with us. And they, in fact, most of the delight or the love that we get from our business are typically which are using 2 or 3 or more services from our platform. And I think that is fundamental. And by definition, like, if they are loving us more, they are kind of willing to pay more, and they are more profitable as well. So I think this entire strategy of running as a platform and being extremely committed to it is going to be a differentiator. And that's what, and also I think really, if I think about the entire fintech ecosystem, for us, the boundary between the competition and the boundary between the between competition and a partner also becomes a bit blurred, because we're a platform, and we have one of the payment product called Optimizer, which kind of helps our different businesses to run different payment gateways on their businesses. And this product helps them actually run different payment gateways far more easier, which means we are enabling some of our competition to also kind of get integrated easier to our customers. So I think it's a value that platform is delivering, and therefore a lot of competitions end up becoming partners with us as well.
Okay, so one platform which can offer 360-degree solutions to all the businesses. Wow, interesting thought, Rahul. Now, since you also mentioned about business value, I cannot let you go without asking an important question about the business value and the value that Razorpay may create going ahead, because we are living in the world of IPO market right now. So Rahul, any chance that you are in the process of maybe filing an IPO or maybe raising more funds? Because I think after 7 years, it's a decent time to hit the capital market, right? Because the market is also ready for it. So any thoughts on that side?
Right, Amol, and we raised I think close to around $500 million over last 1 year. So I'll tell you, for IPOs, typically companies, why they do, and basis that framework, how we think about it and how and when we should do it, if at all the IPO. Typically, you would do an IPO if you are in need of funds because you want to expand, or you want to acquire, or you want to kind of invest more into your resources. You want to do an IPO because you want to raise funds, because you want to kind of give some liquidity to your employees for their stock options, or kind of you want to do an IPO and think, okay, your valuation, or rather you have given the value that business could create has kind of gone to pretty decent scale, and now the hyper growth would not be there. The business would be more in sustainable mode, and therefore do an IPO. So typically, these are 2 or 3 reasons why companies would do an IPO. Now, for us, so first, like in terms of whether we are like looking at raising a fund, we are not, because we already are fairly well kind of very comfortable in space. We recently also made quite a few acquisitions, and kind of fairly clear, like in near future, we are not going for any more acquisitions right now, because we're focusing more on integrating all these acquisitions far more closer in the company. The second, in terms of providing liquidity for the stock options to employees, we have been doing consistently over for last 4 years, every year providing kind of secondary events for the employees, and fairly comfortable. Even if we want to kind of do it ahead, we do not see a big challenge on that one. And third, now, which means that IPO we will be doing primarily when we think our business has reached a sustainable stage where we have all the three businesses are gone to a level where we have fairly predictable revenues and fairly predictable profitability, or rather a good profitability for all the three businesses. At that point, we will look for an IPO. Payments, I said, while we are almost profitable, we still have to get profitable there. Over next 2 to 3 years, we have to get our neo-banking and capital business to at least 5 to 6 or rather 10 times scale what we have right now, make it profitable. When all the three business are profitable, are running independently, have fairly predictable revenues and scale where they have to go, at that time we'll think about IPO. And so maybe around 2 to 3 years down the line, but nothing right now.
Okay, sure. And on the acquisition part, because you also acquired lots of small companies, maybe to strengthen Razorpay more. Are there any plans? Any more plans in terms of acquiring fintechs or maybe startups?
Yeah. So first I will just probably add a point on why we made all these acquisitions. So I think one thing we have been very clear about, that given we are building a platform, we have to build multiple capabilities in this platform. We would be doing a lot of things organically. Some of these things we can't do organically because it takes quite a bit of time to scale, and that is where we are looking at acquisitions. And from that basis, I think we made quite a few acquisitions over last few years. Now I think building a platform requires building organically, acquisitions, and partnerships. So I think right now we have done quite a lot of acquisitions, focusing more on integrating it more deeply into our platforms. Focus going forward, I think, will be a little bit more on partnerships than acquisitions to strengthen the platform, and of course doing our own organic builds.
Sure, noted your points, Rahul. And let me shoot one more, maybe a last question to you apart from Razorpay. Give me your sense specifically on the industry. We have seen number of fintechs in India. Large number of fintechs also are unicorns today in India. The world is looking at India's fintech industry, with enough positivity and looking for partnerships. You yourself have entered into different countries right now. But how is the current state of Indian fintechs according to you? Because there is a funding winter that we see. Investors are going a little slow, and most of the fintechs have also realized that it's not going to be easy, to be profitable and to make a sustainable business model. So, how do you view the current situation of the fintechs?
So I think one thing is fairly clear. Fintech business in India is a business of scale. Whether you build a platform or whether you kind of run an individual product, I think scale is very, very important, because margins are in general thin, and only at a scale you will be able to create enough profits or enough revenues to kind of sustain your cost and therefore be profitable. So I think that is, I think, one major thing. The other aspect is also with I think specific to payments, with UPI coming in, ability to make margins in the business has also gone down. So these are the two major things, I think, which is defining the cost structures and the profitability of companies in fintech in India. So I think with the entire so again, I think most of the companies, which I would not comment a lot on B2C companies because I do not have a lot of expertise in there, but B2B companies are companies which are in general far more resilient to a funding winter or otherwise, because businesses typically are working with you because they see value. They are not working with you because you are running, say, a cashback, or kind of you are very strong into marketing and therefore you'll be able to attract the consumers. I think businesses work with you because they see value. I think from that perspective, I do not see a big challenge in the business models and the companies in this space to continue running. But I'm sure, some of the things will definitely happen over the bets that companies are taking for next typically would be like earlier it would have been for next 3 to 4 or 5 years in timeline. Now those bets will come to more to 1, 2 or 3 years timeline. So some of the costing and therefore some of the investment rationalization would happen. Some of the expenses, I think, pullback would happen. I think, but most of the B2B fintech companies, I do not see any significant challenges they would facing because they have fairly good predictable revenue lines. It would be more about how they can contain their cost a bit better, and probably investing into slightly shorter term bet rather than very long term bets till the entire ecosystem recovers.
Okay. I'm done with my questions, Rahul, but just one quick thing. I most probably your answer will be no to it, but let me just uh, learn from you. So you are obviously into the B2B. You have already made your agenda very clear. But by any chance, considering the huge scope in the B2C space, you are planning to target that space by any chance?
No, as you said, and to add to it, I think B2B and B2C businesses have very different DNAs. It requires, it's not very easy to run both the businesses together. One is, again, it's very different businesses, very different kind of investments, very different kind of branding, marketing, positioning, acquisitions, etc. I think while a lot of companies have dabbled with doing the B2B and B2C together would have a lot of synergies, they're not very great successful examples across the globe. So yeah, I think specifically from Razorpay perspective, we already have a lot to do in B2B space, right? More often than not, we keep answering. The biggest question mark we have in front of us. Okay, what are the things we have to say no to in B2B space itself? So yeah, no distraction towards B2C right now.
No, sure. I think that's quite meaningful, Rahul. And I'm done with my questions. I have more, but I think the time is up. Maybe we can take that question in the sequel of this interview, very soon. But thank you so much, Rahul, for your time and sharing all these meaningful informations. And thank you so much, ladies and gentlemen, for tuning into FinTech Diary and watching this on etvmsi.com. Thank you so much.
Thank you, Amol. It was a pleasure. Thank you so much.